Hi, everyone. Welcome to today's RightTraining webinar on comparing retirement savings options. My name is Jilliana, and I'm the customer relationship lead here at RightCapital. I'm really glad you could join me today. Happy Friday to everybody. We all know that one of the most common client questions we hear is something like, should I contribute to this account or that one? Maybe it's Roth versus traditional, SEP or solo 401k, or what's the smartest way to save given my income? On the surface, these questions sound simple, but the real answer depends, of course, on those contribution limits, different tax treatments, income eligibility, and what we're actually trying to accomplish in the long run. That's why saving strategy is so important in a financial plan. It's not just about saving more, it's about saving in the right location and using tools that give clients flexibility, tax advantages, and long-term control. So today, the goal is to show you how to illustrate a savings proposal comparison in a way that's clear and compelling for clients. We're going to cover building and comparing those saving strategies for those side-by-side comparisons. We're going to look at understanding RightCapital's behind the scenes of account contributions, and we're going to also look at some best practices for presenting those scenarios in a way that clients can easily understand. As always, we will wrap up with a Q&A at the end, so feel free to drop any questions into the Q&A as we go, and I will be sure to address as many as I can at the end of the webinar today. So I've got about 35 minutes or 40 minutes or so of content planned for us. Let's jump into it by opening up our case study and taking a look at Ross and Rachel, who we will be working with today. One other note that this webinar is also recorded. Let me not skip ahead on that one. So you will get a copy of the recording after the webinar is completed today. But let's dive right into it. So as I mentioned, we are going to be working with Ross and Rachel. I'm going to go ahead and open up the client plan here. In the first place I want to direct your attention to is going to be our profile and then our blueprint tab. And I just want to show you what we have entered in the plan right now. So that way when we're making our savings proposals, we have an idea of what's going on in the base case or our current plan. So if I scroll down a bit, of course, we have Ross and Rachel. They're in their early to mid 40s. They have a child in the plan, age 17. We do have some 401k accounts for Ross as well as his IRA taxable account. Rachel has a bank account. There's also a primary home and an investment property as well as a mortgage on that primary home. Looking at the goals as well, we are planning for college for the child and then retirement later down the line when Ross and Rachel hit age 67 respectively. And then, of course, long-term care very much later on during the plan. And then lastly, just to give you an idea of the incomes and savings as well as expenses, we're going to take a look at Ross's income here. He is W-2 salaried with $155,000 of income per year. Rachel is self-employed, so she is working on her self-employed income. They have Social Security estimated in the system. Ross is currently contributing to his 401k. And then we also have our pre-retirement living expenses at $8,000 a month. So this is a great visual. If you are doing live client presentations, it's always great to start with the blueprint when you're bringing a client in to look at their plan. It's just a nice visual breaking out items by owner, showing them what they have in the system already, especially if it's been a little while. It's always a good refresher to take a look and see what we have going on within our base case here. So now that we have a better idea of who we're working with, I want to dive into two common scenarios where we're going to model our side-by-side savings comparisons, and we're going to do that in the area of the software where we can model those what-if scenarios. I'm going to scroll up to the top here, and I'm going to navigate to the retirement tab. Now, retirement analysis is going to be where we can model our what-if scenarios. Using the action items down below, we have action items that pull in from our current plan, which is the information we were just looking at over in the profile tab, as well as the proposed plan, which is going to be where we can make those adjustments to the what-if scenarios to really see what happens if XYZ were to occur. Just as a quick example for anybody who might not be familiar with the retirement analysis functionality, if Ross maybe were to look at retiring at an earlier age. Right now, he's slated at retiring at age 67, but we can utilize the slider here, or we can type in the box as well and see what it looks like if he were to retire a couple years earlier. You can hit enter, or if you scroll down to the bottom and click refresh to apply that change, we can now see highlighted in blue, we have our proposed plan, which is modeling a earlier retirement age, and we can see how this impacts our probability of success. In this case, retiring 7 years earlier brings us from a 64 to a 49% probability of success. So we can see these changes occurring in real time as we manipulate the action items. I'll go ahead and set that back. I just wanted to give that quick functionality assessment for anybody who's not familiar on the retirement analysis tab within RightCapital. But today we're going to focus on two specific scenarios for this client case. The first one is going to be focusing more on Rachel's income. We saw that she had self-employment income. She was not currently making any savings contributions to any accounts. And so she's unsure whether or not she should contribute to a solo 401k or a SEP IRA account. Two different account types. We can model both in the system. We're going to utilize our action items here to show a side-by-side comparison of what those contributions are going to impact the plan. The very first thing I always like to recommend when doing multiple what-if scenarios within one plan is going to be navigating to where it says the current plan up at the top here. I'm going to click on this pencil icon to add or remove plans. This is very nice as it gives us additional functionality where we can add additional proposed plans to the system. So instead of manipulating the original proposed plan, we can click add a new plan. This is going to give us a copy of the current plan. And then from here, we can title the new proposed plan, whatever is easiest for us to keep track of. So that way, when we're modeling our scenarios, we know exactly what we're modeling within this plan. In this case, since we're going to be focusing on Rachel's retirement savings options, we're going to title this, and you can always title this whatever is easiest for you to keep track of, but I'm going to title this Rachel's solo 401k versus SEP IRA. Make sure you hit the check mark in the side here, otherwise the title is not going to save, and then we'll hit OK. So you'll notice what happened here now is we have two drop downs that have popped up above our current and our proposed plan. The plan that we're going to manipulate the action items for to make changes to has to be selected on the left-hand side. So I'm going to select Rachel's solo 401k versus SEP IRA plan on the left-hand side here. Fantastic. So we have this option set up. We can see our current plan pulling information as well as our now new proposed plan for our action items to make adjustments to. In this case, again, we're going to see what happens with the differences of Rachel contributing to a solo 401k or a SEP IRA. So if we scroll down to the action items here, we can see we have a series of pre-generated action items. But in this case, we're going to be proposing some brand new savings items. So in order to do that, we're going to scroll down to the bottom and click the edit button in the bottom corner here. This is going to allow us to add or remove action items. This area is going to allow us to pull in additional action items from the proposed plan that we want to bring into the, It's going to allow us to bring in action items from the current plan into the proposed plan. And that's going to allow us to manipulate those items within these checkboxes here. However, as I mentioned, we are proposing a brand new savings item. So in this case, we're going to click the Add New Items button in the bottom corner here. I click Add New Items, and I'm going to hover over Savings. And in this case, we'll do the first one. We'll model that solo 401k. So I'm going to hover over my 401k account types here, and I'm going to find solo 401k. And then when I click on that, this is going to open up the solo 401k savings card. The savings name, we can always adjust the name and the owner. In this case, this is going to be for Rachel, so I'm going to make this adjustment here. The target, we have the ability to target an annual dollar amount. We can also do a percentage of salary income, as well as a maximum contribution option for those who are maximizing the contribution for this specific account. In this case, I'm going to do a percentage of salary income. And Rachel wanted to be a little more aggressive with her savings, so we're going to do a 10% contribution. Now, on top of the contribution amount from the client, we can indicate when this is going to start and end. In this case, I'll set it to already started, so it starts to happen immediately. And then the savings ends is going to be Rachel's retirement. We can have it set to Ross's retirement, but since this card is owned by Rachel, it's most clean to have it set under Rachel's retirement. We also have primary and secondary match information. In this case, for simplicity's sake, I'm not going to model any employer matches. However, this is where we would indicate those fields. We also have a flat percent and a flat dollar match. So a flat percent match is going to allow you to model a contribution from the employer regardless of what the employee is contributing. We also have the amount of a percent of match indicated to the Roth. So there's an option if there's a Roth possibility. And then this checkbox is very important. This is our self-employed checkbox. This is going to tell the system that this contribution is going to be coming from self-employment income. We had Rachel's income under the Blueprint tab under a self-employment income card. So when we have a self-employment income card that we want to make contributions from, we have to ensure that we're marking the self-employed box. This way, the system knows this contribution is going to look to a self-employment card in order to make that savings. Once we have our contribution set here, I'm going to hit save. And we can see here Rachel's solo 401k option populate in the system. The green dot is going to indicate that this is a brand new item, not pulling in from the current plan whatsoever. If we scroll up to the top, we can see the impact that just the solo 401k has on the plan. In this case, we're going from a 64 to an 80%, which is quite a decent jump just for making that 10% saving contribution. But we've only done half of it, so let's go back and do the SEP IRA as well. I'm going to scroll down here. It's going to be a very similar process. Edit, add new items. We're going to hover over savings, and in this case, I'm going to find my SEP. I'm going to click on my SEP. The savings is going to look slightly similar. In this case, we don't have employer match options for this contribution. However, we can still adjust the savings name. The owner is going to be Rachel, and we're going to do just the same percentage that we did for the solo. Now we can indicate when this is starting and ending. I'm going to set it to Rachel's retirement, and I'm going to check off our self-employed box because we are looking at that self-employed income. I'm going to go ahead and hit save, and we're going to see this populate on the left-hand side here as another action item. So now we have both of these turned on at once. So we're technically contributing 20% of our income when we're only looking to contribute 10. So to isolate the impact of one of these happening at a time, we're going to set the solo 401k to 0 with the slider, and I'm going to hit refresh or enter on my keyboard to make that change, and we'll scroll up to the top and see that impact as well. So we still have an 80% probability of success. And let's make that adjustment one more time. I want to see the change here for our 4.2. We'll do our 10% and we'll make that adjustment. We can see here it looks very similar between the two. Now, we have these two options here for Rachel Solo and Rachel SEP. We can isolate each impact by turning off one slider and turning on the other, as we just saw, and I'll do it one more time. So that's going to fully isolate one and not the other. Now, looking at the cash flows here, let's just take a look under retirement cash flows, and I'll show you where this is going to display in the system. We have our cash flows, and I'm going to take you to our summary tab. And we're going to switch the toggle here from our current plan to our Rachel's solo 401k plan. We're going to see our plan savings here. In this case, we have the SEP IRA, which flows into the IRA bucket. So we see that contribution savings being made for Rachel's savings. Now, if we go back to analysis and turn on our solo 401k and turn off our SEP IRA, I'll hit refresh here. We'll go back to cash flows. Let me just refresh this screen here so we can get those changes over into our cash flows. And we see here now our plan saving is going to be in the 401k bucket for Rachel's saving. So that's again the summary tab in the plan savings column. If you click into it and then in 401k, we can now see instead of IRA, it's going into the 401k bucket. Another good place to see savings contributions within the cash flows is going to be the accounts tab. So accounts, and then within the drop down that says ending balance by accounts, we can filter it for additions to accounts. In this case, we're making the additions to our 401k bucket, and we can see here if we click into the 401k, the same savings for Rachel's solo 401k displays here as well. So good visuals here within the cash flows to just double check that the changes we're making are actually flowing through into the plan accurately. I'm going to pop back into analysis here. Now, this is a similar outcome between the two account types. And we can see that here we're making the same account contribution, so it's a similar impact. However, we can see just by making this one change of contributing some of her income to savings, we're really making the plan a little bit more robust than that 64% probability of success with a much higher ending asset value as well. Fantastic. So that's one way to isolate different comparisons within the system. Now, another common scenario when it comes to retirement savings comparisons is going to be taking a look at the different taxable buckets, right? In this case, we were working in the tax deferred, but Ross, we remember, was contributing to his 401k account, and he's curious to see what the impact on the plan would be if instead of contributing to the 401k, he just outright contributed to the Roth account, a Roth IRA, for example. So let's go ahead and build out that scenario for Ross as well, right? So we've built out Rachel's. She's good. We have her impact here. Let's add or remove another proposed plan here, and I'm going to click add a new plan. Now, just to point out, you do have the functionality to copy the proposed plan that you've created as well as the original proposed plan. So if you are building off and want to use certain action items from one proposed plan to another, you can copy the proposed plan to keep those changes. However, I'm just going to create a brand new plan, which is going to copy that base case. And this is going to be for Ross's 401k. Versus that Roth IRA. I'm going to again check the checkbox here to save that title, and then I'm going to click OK. Now we have the drop down here for our 401k versus IRA plan. And again, the plan we're making adjustments to has to be selected on the left-hand side here. Excellent. I did see a quick question pop up here. I'm just going to interrupt for just a moment. I saw that quick question where the retirement tab says, sorry, we're experiencing technical difficulties. Try logging out and logging back into RightCapital. If that doesn't work, try clearing your browser cache and cookies, and that usually can resolve that error for you. Alrighty, now we have our 401k versus Roth IRA plan entered in here. Now we can see here we have Ross's 401k with that 6% contribution entered in the system already. So this is going to be a little more straightforward. We're going to click edit, add new items, and we're going to find the Roth IRA savings option here for Ross. We're going to click Roth IRA. And once this opens up for us, we're going to leave the owner to Ross because we're working with Ross now. Percentage of salary income, I'm just going to keep that same 6%. And we'll see what tax benefit we get off of that. We're going to have this start already started and end at Ross's retirement. I'm going to go ahead and click save here. And then once this populates, now we have both of these entered in at once. So I'm going to turn off the 401k option. And we can see here that this is lowering our probability of success. So let's take a look and see what's going on here. We have the 401k turned off, but the IRA is turned on. However, it doesn't seem to appear that these savings are being made. Since we don't have a greater good probability of success here, let's double check the cash flows and just make sure that we are getting those savings pulling through the system. And I'm going to click on my summary tab. And in this case, I'm going to switch it to my Roth 401k. Or Ross's 401k, not my Roth 401k, I should say. And it looks like we don't have any planned savings entered in the system here. So this is a great way to just double check. When we're seeing something look a little off in analysis, we can double check our planned savings column, or we can double check our additions to accounts tab. And we can see here that nothing is going into a Roth IRA bucket. So this is going to help us indicate something's going on in the plan, what's going on. Let's take a deeper look. A lot of times what happens, especially with Roth IRA savings, is going to be this income threshold. So it looks like here our friend Ross is above that income threshold, and so they're unable to contribute to that Roth IRA account. I think the takeaway to focus on here is the Roth idea is still good. It's just the Roth vehicle is not available in this way. That doesn't mean that the Roth is off the table, but we would need to take a different route to get money into that tax-free bucket. But let's pivot back to analysis here. I'm going to close these tabs so we don't have too much going on up at the top of my screen here. And instead of going through and doing a Roth IRA savings here, let's try and look at contributing to or utilizing, I should say, a mega backdoor Roth strategy. This is going to give us the same destination. The money's going to end up in a Roth, but we're using a 401k pathway to get the money into the Roth account since we are making those have that larger income, and so we can't quite contribute directly to a Roth IRA account. Now, there are two different strategies that often get mixed together. That's going to be the backdoor Roth and the mega backdoor Roth. They're not the same thing, so let me just take a minute to explain. A backdoor Roth is going to be used when someone is over the income limit to contribute directly to a Roth IRA. The way this works is you're going to make a non-deductible contribution to a traditional IRA, and then you can convert that amount into a Roth shortly after. The key thing to know is that the contribution limit is still the IRA limit. So even though the strategy gets the dollars into the Roth, you are still capped at that smaller amount. Versus a mega backdoor Roth, where you can use the 401k as the savings vehicle instead of an IRA. And then if your employer plan allows for after-tax contributions and in-plan conversions, we can then contribute more to that than that IRA limit because we're using the total 401k contribution limit instead of the IRA bucket. So in Ross's case, when we are utilizing the Roth IRA contribution, the phase out is preventing it. So instead of trying to force that, I'm going to go ahead and remove this card, and we're going to model a mega backdoor Roth here. And the way to do that in RightCapital is going to be very similar process: edit, add new items. We're going to hover over savings. And in this case, we are going to use our after-tax 401k savings card. This is the way to model a mega backdoor Roth within the system. Alrighty, so we have our after-tax 401k. I'm going to model our percentage here. I'm going to do the same 6%. Owner is Ross, already started. Ross's retirement. We do have the ability to mark this as self-employed income, just to note that. However, Ross is W-2, so we're not going to worry about that. We have the ability to convert this to a Roth IRA, a Roth 401k. I'm going to leave it at Roth IRA. And then the conversion year, you can select a specific calendar year for this to occur at some time in the future, or I'm going to have this occur right now, annually via in-service withdrawal. I'm going to go ahead and click Save here. And we can see now if we scroll back up, we do have now the amount going into the Roth IRA account. If I go back to my cash flows tab, just to show you where this is going to display now, we have summary. And we have in our planned savings column, our Roth IRA savings displaying here. Also within the accounts tab, additions to accounts and our Roth IRA bucket is now appearing. So this just confirms that we had that limit that we were hitting with the traditional, just contributing to the Roth because they were making a little too much money. Now we're utilizing the mega backdoor Roth strategy and we're getting the savings into the Roth IRA account that way. The probability of success is lower than the base case, just contributing to that 401k. So something to pay attention to. Maybe we could look at increasing that contribution amount if that's something that Ross is comfortable with. We can spike that up and see how that impacts the plan. Or we can, utilize this as an option indicating to us that maybe it is a good idea to stay contributing to the 401k right now. So just a couple of options there when it comes to modeling different savings comparisons. We can really utilize the action items and see the changes occurring in real time. And we can also double check our information within the cash flows tab to help us really understand and make sure that these items are flowing into the plan appropriately. Now we have these two items between our solo and SEP comparison and our 401k versus Roth IRA comparison. I will touch on some really helpful visuals a little bit later on in the webinar to help clients better understand what's going on behind the scenes here. Of course, as advisors, we understand how these items are moving, but it can be helpful to give the clients a nice visual to really highlight the value of the different items that we're showing them today. But before we dive into those helpful visuals and presentation tips, I do want to touch on the different account buckets within RightCapital as it does focus on a bucket system. And I want to show how that flows into the cash flows so you can have a good awareness of how these items are going to flow in, as we really did pay attention to the cash flows today in modeling these what if scenarios. So give me a moment here to just stop this share and I'm going to pull up a slide deck presentation to just show you a visual of what we have entered in the system now. So, believe you can all see my screen here. And so this is going to show us looking at how the different retirement and savings accounts flow into the cash flows tab. RightCapital, like I mentioned, organizes accounts into buckets utilizing a bucket system. So similar account types like all 401ks, Roth accounts are grouped together. This is going to help us see the full picture of how the contributions, employer matches, and other savings affect the cash flows over time. We can see here it's broken out by account type. If the client or the employee can contribute to it, if an employer match is eligible, and then where it's going to show up in the cash flows. For example, very straightforward, a 401k savings card can be contributed to by the client. There is an employer match eligible, and it's going to show up in our 401k bucket within the cash flows tab. On this very first slide, we have some of the most common retirement accounts like that 401k, our Roth IRAs, SIMPLE IRAs. Pay attention to the contribution source. Of course, if it's employee, if an employer match is eligible, and then we can see, of course, where this is going to display in the cash flows. The next tab we have here, if I can get over to it, perfect, is going to show us some of the less common accounts. But it's always good to have this information. And of course, you'll get a copy of this after the webinar, so you'll be able to refer back to this tab, just showing us the flowing into the cash flows of these less common or other employer-sponsored plans. So that way, when you're adding contributions and match accounts, they're automatically grouped into the right bucket and reflected correctly in retirement projections. So it's good to understand when we're entering this within the savings tab or within retirement analysis, and then how it's going to flow and where we're going to see it displayed in the cash flows. Fantastic. Alrighty. And then while I'm sure most of you watching are aware of this as well, it's also helpful just to be aware of the common contribution limits. For example, 401k accounts have those annual limits. Roth and traditional IRAs have their own specific caps. And then SEP and simple IRAs can have different thresholds. So while we don't need to memorize them, it is helpful to reference these limits, and it can also help clients understand why certain contributions are possible or constrained. So again, just backing into these different options, you'll see here account types and where that's showing up in the cash flows, as well as employer match eligibility and where that contribution is coming from. So super helpful information here. Again, just understanding how all these items are flowing through the system as we enter them in RightCapital. But awesome. All right, let me back into the software here. I wanted to just take a few minutes to touch on how that flows. But now that we've explored different buckets and how that's going to affect the cash flow here, let me get back into my plan. Give me just a second. Here we go. Back with Ross and Rachel. So we went through, created these different powerful scenarios. Seeing the numbers is one thing, presenting them to effectively ensure clients understand is another thing. So let's take a look at what reports and visuals and presentation tips we can utilize when we're showing the clients what sorts of items we are having, what we have for them in that client presentation today. Alrighty. So one of the very first tips that I want to touch on when it comes to client presentations very quickly is going to be actually out in the advisor portal. So I'm going to click on my logo to get back out to the advisor portal, and I'm just going to touch on our client access mode. When you're working with a live client and you want to do a presentation within RightCapital to show them everything that you've run through, we can utilize the planning access tab in conjunction with client access mode to give the client a niche view of RightCapital. Excuse me, if we scroll down a bit here, we can see we have different checkboxes for each of the modules within the system. So we can give the client a really specific view of what we want to show them. For example, we can show them retirement analysis and cash flows, since these are items we talked about in our presentation today. We can show them these specific items that we've built out. You can check off any specific item within the system here. I'll leave the default ones checked as well. We can include the blueprint if we only want to show them the blueprint. That's that sort of map of assets that we had earlier on in the webinar. And then once we check off the items we want the clients to see, we can click the drop down and open the plan in client access mode. This is going to really cut down all of the other modules within RightCapital. Should you have a client that wants to look at all the different tabs and maybe get off topic, this is going to allow us to do a live client presentation within RightCapital. We can see the items that we've checked off for them to see. And of course, we have full functionality as well. So you can select the different plans here. We can scroll down and make adjustments to these action items. So if we wanted to show what does it look like if we just fully max this out, we can make that adjustment, see it happening in real time. So we can have a dynamic conversation with our clients from the client access mode. It's going to give us full functionality. We have settings adjustments that we can make should we need to make setting adjustments, as well as the chat icon in the bottom corner is hidden from view. So if you were working with a support member and you were looking to kind of pause that conversation so you could jump into a client meeting, that's going to disappear for you as well. So it's just a focused presentation on the items that we wanted to display with the clients today. So great information here. We see the cash flows that we were looking at, and then the profile blueprint, which we were looking at as well earlier on. So just a nice condensed visual within RightCapital via client access mode. So great presentation tip there. And then another great presentation tip for ensuring clients can see the before and after effects of your recommendations would be looking at some of the visuals that we include in the retirement tab. The retirement tab primarily is comprised of analysis and probability, where we do most of our action items work, but this series of tabs to the side are going to provide us quite some quite helpful visuals to get a nice picture in the client's mind of what exactly is going on behind the scenes. So we're going to take a look at the retirement details tab first, and this is going to show us a series of charts. If you click on the down caret, it's going to give us other options within the chart title where we can compare different areas of the plan. So we're looking at the very first one, which is income sources. This is going to be displaying our income sources of the plan that we have selected on the left-hand side of the screen here. So if we wanted to look at a different plan, we would select it on the left-hand side, let that change load, and then we would come back and we would see now this plan is the one that's displaying for us. We also have an option to look at the withdrawal rate chart. This is just illustrating that percentage of invested assets withdrawn each year to fund those retirement expenses. We have our retirement spending chart. This is going to give us that color-coded breakdown of those retirement expenses, just helping you visualize the impact. Maybe if you're modeling spending strategies, this is a good visual to utilize that as well. We also have an income comparison chart. This is going to just compare the income sources as a percentage of the overall retirement income. It's going to help us understand the balance between those income and expenses as well. We can see these are interactive charts as you're hovering over them. You get some granular information on what sections of these pie charts are actually making up the overall percentage. And then we can even take a look at specific categories by highlighting them or completely turning them off in the plan if we didn't want to see what was going on with that specific item. And then lastly, we have that total spending comparison as well, showing us large categories like retirement expenses, tax, housing, other expenses, and healthcare, which can be a very large expense by the end of the plan once the clients get a little bit older. And then, of course, as we're clicking through all these different graphs, we have our key metrics pointing out high-level information for all these visuals as well. Another super helpful tab is going to be that savings tab. The savings tab is going to display the very first year, which is our current year savings, displaying investment contributions occurring in the first year of the cash flows, as I mentioned. And we are breaking this out by taxable, retirement, education, and HSA. In this case, we have those retirement account comparisons that we were drawing up. So that's why that's displaying here for that 24,000. With the drop-down caret, though, more options. We have savings over time. So this is illustrating the growth of savings over time until the very last year of the planning horizon. You can hover over each of these to see how savings growth increases over time. And if you have multiple account types that you're contributing to, you will see them all display color-coded within the chart as well. High-level information on the right-hand side. We have the savings rate, which is again showing the percentage of income that's saved each year. So this just gives us helpful insight into client savings behavior. So if you're tracking, what percentage of income the client is saving, we can see that displayed here, a very helpful graph. And then we also have total savings and returns, which is going to combine contributions and investment returns, offering us a nice view, a comprehensive view of that client saving trajectory as well. Very nice high-level information on the side. Lastly, we also have the comparisons tab. The comparisons tab is just going to give us a nice side-by-side comparison between the plan selected on the left-hand side of the probability screen versus the current plan. In this case, we can look at invested assets, but we also can look at the difference in net worth. We can see a higher net worth by recommending the items we have suggested here. Less total taxes overall, which is a great benefit, as well as more assets at retirement. And we can see, again, the green is going to be proposed and the blue is the current plan. Super helpful visuals within all of these tabs, allowing you to compare different strategies side by side, making it easier to demonstrate the time before and after impact of various retirement planning choices. So this approach can help enhance client understanding and facilitate that more informed decision making as we have these powerful visuals behind all the different modeling we're doing in retirement analysis. A very nice thing to do as well after you have completed maybe a live client presentation, or maybe you've done this report modeling and you want to send the client a deliverable. It's also super helpful to utilize RightCapital's report functionality. Now, the nice thing within client access mode is you can generate a report from client access mode, but you can also generate a report within the full RightCapital software. It's going to be found in the same spot, gear icon, reports. And then from here, you can generate a report from all the specific modules that you have talked to your client about in that day. So within retirement analysis, for example, if you click into the analysis that's underlined, we can see here all the different charts we just talked about when it comes to the savings and retirement details. We can get all of these into a chart as well as maybe our Monte Carlo. And then the toggle down at the bottom allows you to select multiple plans. So since we've created multiple plans, we can include multiple plans in the report as well. But of course, feel free to include as many different sections within the report as necessary for you and your client to have a great understanding of what's going on behind the scenes. Now, once you have all the different items selected, you can download the selected pages, which is going to download it into a PDF to your computer. You can also download it and save it to the vault. So if you are uploading reports to your client's vault, this down caret's going to give you a nice one-step feature to download and just input it into the vault instead of having to download and re-upload, saving you some time. You'll see here that the report downloaded to my computer, and we can see here the visuals that I was talking about earlier on within the retirement details tab, displaying all those helpful visuals over time in a nice comprehensive chart for the clients. Something for them to take away at the end of the meeting to really highlight the benefit of your proposals. One other area it's super helpful to touch on with clients as well, and I'm going to go into the full RightCapital plan to get here. But since we were doing items like SEP, IRAs, Roth contributions, there is a tax benefit in most cases to these different savings contributions. So it's always awesome to just touch on the details tab within the tax estimate tab where we have our mock 1040. This is going to project out what the 1040 would look like for every year of the planning horizon, and we can see how different information that we've entered in the system impacts our 1040 and our specific line items. So this is a really common or a popular area within the software, I should say, but I always like to point it out for anybody who's not aware. When you're doing these maybe tax advantaged account savings comparisons, it's always a great idea to just pop in and take a look at the 1040. We can highlight specific plans. So should you be doing that side-by-side comparison that we were doing, you can take a look at the different plans that you've created and see how each line item is impacted. Fantastic. All right. By combining the different reports, client access mode, clear visuals, you can really make financial planning more interactive, transparent, and client-friendly. So to quickly recap all the different items we've talked about today, we covered our 2 different case studies and how we were modeling those what-if scenarios between the client contributions. We reviewed how retirement savings accounts flow into the cash flows and how RightCapital organizes them into buckets for our projections. We looked at common and niche accounts, and we explored different presentation tips, including reports, visuals, and client access mode to make your plans clear, engaging, and actionable.